Welcome to the Jill on Money Show. It's Monday, July 29th. I kind of feel like last week there was so much financial and economic data that came out, and we're embarking on another big week for the economy because we have a Fed meeting, we have a jobs report. So I thought this would be a good, quick episode to catch you up on everything that's been going on. So what I want to report to you is economic growth in the second quarter was way better than expected. And that report came out, and I think people were like, holy smokes, this is incredible. So on Friday morning, the day after the report, I went on CBS Mornings to give a quick update as to what was powering that growth. So let's play that episode, and then I'll come back on the other side and tell you some more very interesting things that occurred after this segment aired. So here is me with anchor Nate Burleson talking about the economy on CBS Mornings.
And today's Money Watch, American consumers are on a roll, and that's helping boost the economy. The latest numbers show economic growth actually doubled in the last 3 months, from 1.4% in the first quarter of 2024 to 2.8% in the second. CBS News business analyst Dollar Jill is here to tell us what all of this means. How you doing? Good morning.
Doing great.
All right. So what accounts for this better than expected growth in the economy?
It was a joint effort. I mean, we saw the businesses out there. They're restocking. They're buying equipment. The government spent money, and consumers, who account for almost 70% of the total economy, spent a lot more than expected. So this was a better than expected report. And I think that this really does bode well for right now.
But when you look at certain polls, many Americans are still struggling with higher prices. So how do you explain that dynamic?
Well, I think there's two things. If you are a wealthier American, the value of your house, the value of your portfolio has gone up a lot.
Right.
And you're happy and you're spending money. But the lower to middle income Americans, I'm a little bit concerned about them because they are increasingly turning to debt. Credit card debt is increasing.
We've talked about this a ton.
Yes,
right?
Revolving debt is up over $1 trillion. And, you know, when you have 22% rates on your credit cards, it's hard to pay that down. So I'm a little bit worried that those folks are going to run into trouble, potentially.
So right after I did this segment, like maybe an hour later, there was another report that came out that was really interesting. I mean, interesting to a nerd like me, but let me tell you why you should be interested. Because it was a report about inflation. Not the big consumer price index, this more esoteric measure of inflation called PCE, the Personal Consumption Expenditure Index. That's the one the Fed keeps a close eye on. So the PCE comes out. It's Friday. It's 8:30 in the morning. Everyone's like, whatever. I'm going to the beach. I'm going to the mountains. I can't focus. And I think if you just read the headline, you missed something that was interesting because the headline was like, hey, 12-month annual core inflation rate, the one that takes out food and energy, unchanged. So that almost makes you think nothing happened. But inside this report, there was a 3-month annualized rate that actually fell pretty dramatically from 2.9% in the previous month to 2.3%. Just a reminder, gang, inflation rate refers to the rate of change in prices, not a drop in those prices. So when I say that the numbers are slowing down for the 3-month annualized rate from 2.9 to 2.3%, it doesn't mean prices have come down. We're talking about that price increases are slowing down. That's also called disinflation. Why is this also important? We are beginning a Fed meeting this week, tomorrow and Wednesday. I just don't think they're going to do anything. I think that they've told us that they are data dependent. Fed Chair Powell said that they need more good data, whatever that means. San Francisco President Mary Daly said that, yeah, the inflation rate is improving, but we're not there yet. This is probably the meeting before the first cut. They may not even telegraph exactly what they're doing, but I think they're going to say, great progress on the inflation rate. We're happy about that. Job market still remains strong, but they may refer back to the GDP report to say, well, we don't need to cut right away because the economy's doing just fine. In fact, better than fine. That also tees up Friday's jobs report, because this is the report where it's going to be interesting to see whether or not wage growth is slowing down. There has been just an enormous amount of consternation about what's going on in the labor market, and it is sort of slowly losing some steam, but it's not a wholesale bad labor market. I mean, in certain industries, obviously, but not for everyone. So this is going to be a really important week for the economy. You don't have to worry about it so much for your money because I think you have no control over this, but I did want to give you some context. I also wanted to point out last week was a very crazy market week for stocks specifically. On Wednesday, we had the worst day for stocks since 2022. The S&P 500 was down 2.3% in a single day. The Nasdaq down 3.6%. The selling continued on Thursday, but then there was a little bounce back on Friday. Just to provide some context, stocks are still higher this year. The S&P is up by 14.5%. Nasdaq is up by more than 15.5%. But finally, we're seeing some other companies participate in the upside. Small stocks seem to be actually participating in some of this, which is good. All right, so I think that's about it. We'll be back tomorrow talking to you and answering your questions because that's what we love to do. But I thought this was just a very good moment for us to take a breather and kind of get ourselves caught up with the economy, caught up with data, caught up with markets. All of this is to say, if you have a financial question, an economic question, anything going on in your life, don't worry, we're here for you. Go to the website, JillOnMoney.com, click the Contact Us button, and of course, check the box if you'd like to join us on the air. Don't forget to sign up for the free weekly newsletter, subscribe to Jill on Money Live for $35, and of course, subscribe to this show on the Odyssey app or wherever you find your favorite podcast. Lift someone up to start off this last week of July and into August. Change your work, change your wealth, change your life. Thank you for listening. We'll talk to you tomorrow.